From the Center for Agricultural Profitability at the University of Nebraska-Lincoln, this is Nebraska Farmcast. I'm Ryan Evans, and on this episode, we'll explore a unique and potentially valuable tool for farm risk management in micro-captive insurance. This concept allows for farm operations to manage risk and insurance costs in a more customized way while also presenting financial opportunities. But as with any financial tool, micro-captives come with complexities, regulations, and risks that should be fully understood before implementing. Joining me to break it all down is Dr. Cory Walters, Associate Professor in the Department of Agricultural Economics here at UNL. He recently wrote an article outlining the benefits, challenges, and strategies behind micro-captives for farm businesses, and you can find that link to in the notes for this podcast and on our Center for Ag Profitability website at cap.unl.edu. So looking forward to discussing how these structures work, how they can fit into risk management, and what producers should consider before adopting them. Cory, thanks for being here again.
Thank you for having me, Ryan.
So what exactly is a micro-captive, and why might a farm business consider forming one?
You bet. A micro-captive corresponds to an insurance company that is entirely owned and operated by the insured. So effectively, you would create your own insurance company and you would operate that thing as if it was an insurance company. So you'd form an entirely new business. So why would a farm consider one? Well, there's a lot of benefits with these things. The first one is you do, of course, get to insure risks from the farm business, and you also get to insure risks from what could be considered excessively priced or poorly designed insurance products that are open on the commercial market. You also get financial gain from underwriting gains. That's where you take in more in premiums and you pay out in indemnities. And those premiums that you pay to your insurance company are untaxed, and then the underwriting gains also accrue untaxed.
And in your article, you do outline several benefits of micro-captives when it comes to risk management and cost efficiency. Could you just walk through kind of generally how a producer could use a micro-captive in their overall insurance strategy?
So the micro-captive will enter a strategy where the producer is thinking about long-term wealth. And to obtain long-term wealth in agriculture, you of course need farm profits, but you also have to survive, survive risks that may or may not happen between now and some point into the future. And as we've watched insurance rates, premiums, coverage, all these sort of things change, generally go up on the premiums and down on the coverage, farmers are left holding more of the stick of exposure. That is where a captive can come in and say, hey, I'm a tool that you can use to help you survive the risks, but at the same time allow you to have those premiums there in the future that would get added back into your wealth at some point in the future. So it gives you more control of your money. You, again, can improve your wealth position in the future if you manage this right. And you can also insure risks that you may not be able to insure at all, or the premiums are just so expensive that you think you can do it cheaper.
Great, thank you. And then to get a little more specific, you do walk through an example in your article involving supplementing a multi-peril crop insurance policy. If you could just explain that example and why someone might choose that approach over just traditional county-based options like SCO or ECO.
Yeah, so that example is straightforward in the sense it comes straight from the crop insurance mechanism. And that's important because that's very verifiable. And we can see those premiums and how they're generated, and it's real. So if you take that's a necessary ingredient for a captive. You need some type of actuarially determined rate to come up with the premium. And so going down the crop insurance side, we have that directly. Then we link it over to the SCO, ECO in the sense of you still have your regular multi-peril policy, your underlying policy, let's say 75, 70% coverage level. And now farmers are facing this opportunity, to buy up at these SCO, ECO policies. But in doing that, you also go to the county yield. So under the captive idea, you would stick to your same farm yields. So you're not subject to the county, because when you move off to the county, it may not follow you. So you could have a problem and the county doesn't, you don't get paid, or you don't have a problem, the county does, and you get paid. Probably a lot of people wouldn't really complain about that side, but the insurance is not linked directly to you. So on the captive side, you write a policy, for some part of that deductible that SCO, ECO was picking you up, and then you write a check to yourself. And as we know in insurance, you don't get a payment every year. So you get to keep those premiums from that going into the future. Whereas if you just go out and buy SCO, ECO, that premium you're paying is gone for sure. And you don't know what will come back out of that until you see the end of the year of where, let's say under revenue protection, you got to see where revenue comes out at the county level.
Great. And I want to ask you about issues related maybe to compliance, tax implications, all the legal requirements for microcaptives. But first, are there other challenges and risks associated with starting and managing a microcaptive that you want people to be aware of?
Yes, these are not, the microcaptive is not something you just jump into willy-nilly. You need to really have a lot of financial understanding of the microcaptive policy, work with people that understand it, but also understand your position financially, because there will be some expenses with this. There's startup costs. There will be administrative costs with this. So it's not free to do the captive. But those relative to the benefits that it gives a captive can be very powerful. You are also insuring when you start out, you put premium into your captive, but you may be insuring something that is larger in value than that premium. So there could be a perception of this thing may not work right away. That's very true, but there's ways to work around that thing, and you have to think past just the startup costs of getting in the captive, where you got to think a few years down the road of when you start accruing premiums inside of that thing, and how you can manage that wealth from there on out.
Okay. And then how about when it comes to legal considerations or compliance or tax implications with microcaptives? What's important to know there?
Yeah, we could get into the details of all those things, but make sure you're working with a captive manager that is very transparent, or even a group that very much understands how captives are managed, because it is going to touch on every one of those things as you go through a captive, and it's I don't want to say it's complex, but it's very fascinating to think about that wealth function of including a captive in that portfolio that does have tax advantages, but there are things you are taxed on and things you are not taxed on. And so you need to understand all those moves through that to understand the value of the captive, because the last thing you want to do is go start a captive and then figure out that there was some other part of it you didn't fully understand that causes you grief.
So how can people work to understand a lot of this? If producers are interested in exploring this option of a microcaptive, what are some steps they should take, and anything else they should consider before moving forward?
Yeah, the first one is become more aware of the microcaptive policy. Try to find a group that will explain it to you very well of how it works. Understand that there is a pile of flexibility in how you can set up your captive or what risks you want to insure. And the last one is take ownership in this. It is our paths as individuals or farmers of how we manage our wealth, and in improving our knowledge of the tools out there to put us in a better position down the road is advantageous to farm survival. And this is part of that equation, especially as we move into an area with higher premiums, higher deductibles, and what perceives to be more risk out in the environment now. This allows for a way to work through that that can keep us from being uninsured. Let's say if we get dropped from something, let's say I hear things like pivot insurance, in some places is not even available. The captive would step in for that. Or even if your deductibles got really big, the captive could jump in for, to insure the large deductible. There's all kinds of creative ways. So you got to let your creative side of your mind get to you a little bit. If you're interested in speaking with me about it, I'd be happy to visit with anyone about these things. I know a few of the groups out running around talking about these things, and happy to to connect people and give my insights as well.
So are there like kind of specialized insurance groups, almost insurance companies sort of that can help people walk through these? I assume you don't just walk into your insurance agent's office and say you want to set this up, probably, right?
Not quite yet. Yeah, this thing is so new. A Google search would probably do you well to find someone who would be a captive manager. With those, there is a high variation in costs associated with that. Some of them are much larger than others, so they have some cost advantages. It's kind of a small niche of a group right now, but it appears to be growing rapidly at this point. Now, captives are very well defined in other sectors in the United States, but not in ag. And the challenge right now, as we sit here in the spring of 2025, is micro captive managers who understand ag. We're lacking on that side, so we need to bridge that. We need people that understand ag to coordinate with admin folks of micro captives, and that will create the space for these policies to be created. But bar none in all of this, you need farmers that are well versed in financial management. And that is literally the farm of today, is a farm that takes financial management and strategy and knowledge to the highest level possible. That's the keys to success. It's changed rapidly over the last 20 years, and this is where we're at now.
Great. And before we go, we should give a quick plug. You hosted a webinar a month or two ago with two Nebraska producers, a father-son duo, Phil and Nolan High, who talked about captives and their captive policy. If people want to go check that out, what can they learn from that?
Absolutely. You get to hear a farmer, father-son, like you said, who engaged in this a couple years ago. So it gives some insights into how they approached it, because there's a lot of ways to slice up a captive strategy. We've met a couple others around the state as well, but they're pretty thin right now. But people are definitely talking about it a lot more, and we're getting a lot more questions.
All right. We will link to that webinar on Cory's article if you want to follow the link in the podcast notes to that on cap.unl.edu. Again, I've been speaking with Dr. Cory Walters, Associate Professor in the Department of Agricultural Economics here at Nebraska. Cory, thanks for your time.
Thank you, Ryan. Thanks for having me.
Nebraska Farmcast is a production of the Center for Agricultural Profitability at the University of Nebraska-Lincoln. For the latest research-based information and education resources to manage your farm or ranch operation, visit our website at cap.unl.edu. That's cap.unl.edu.